Hello, good morning. Welcome to another ES Futures trading stream. Today is Tuesday, April 18. It is 8:53 a.m. So I'm little bit late here. I was doing some of my homework. Uh, all right, let's do a recap of what happened yesterday. Yesterday, the market was extraordinary, you know, painful to watch most of the day. It was there was nothing there, when all this was happening. Nothing there. We have um, this seemed to me at the time. It seems to me first when the market opened, I actually didn't pay attention to the overnight long inventory, but when the market couldn't take the overnight POC, which was always referencing the upper side, it just broke, right? And the contraction to the overnight inventory started here. But it was painful. It was painful. I decided not to be part of this market, but you had to stick to your you had to stick to your screen or try to not to walk away because we never know when opportunity will come. We never know when something is going to happen. That's why I think these setups don't work. Okay, because we never know what is going to happen. The market start to getting too short here. And now you can see the market selling here, coming back, selling, coming back, selling, coming back. The market did the same thing for 1, 2, almost 3 hours here in this period. We got a breakout to the downside that took the low out, and this was the trap here. Uh, Notice where this period was coming. The last period where J came from, held back, and notice where H, I were coming from. When AI formed and came down here, you already have three highs at at the same level basically, and three lows are the same. The question here was where or which one the market was going to take first. The odds of having a sequential trade, that's when you start to see something could happen. Right? Now it's easy to say, right? Okay, first this and then this one, right? It's not that easy. No, the reasoning here behind this movement, if you're going to do something here, was the market was getting too short, yeah, and that this movement that did not have downside extension here, did not have the down extension. You can see market is pushing, and I guess we talk about this in the market update. There was this extraordinary volume here at lows, at these levels. The market was just having this kind of body. It was very weird here. I have this one marked here, right? Um, Very unusual here. And the thing is, um, what I talked yesterday about Peter Steinmeier. He's more like he sees the market more from a mathematical point of view, right? He's a statistics guy. Very good, very good. The way how he sees the market is very different the way Jim sees the market. And it's very useful to understand some things that the market, you know, some 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 of the dynamics of the market, right? I'm not going to tell you what I mean because this journey is very personal. All right, what can be useful for me, it can be just waste of time for you. But I saw these things, and when I saw this kind of activity, this usually represents the end of an action. One action. That was the but the next period can just exactly to the low, pretty much it's one tick to the low. And this one took this low for just a couple ticks. And I was wondering at this time, gosh, if this market doesn't break here, because this is huge volume, big blocks here, all of them have above 150 here. And if this market doesn't break, it had good reasons to break, there was going to be a big upside movement. I mean, the odds of having an upside movement were high because the lack of the lack of excess up here, the mechanical selling coming pretty much from the same level. This level here, okay, this level here at the time, this was half back, almost half back, and then was sold twice from half back. It wasn't exactly to the tick here. It wasn't exactly to the tick. Half back. This line here was up here, down here on my back. Okay, pretty close to half back. So the reference was there. Tracy was selling from half back, and market was getting short. So this being, I we knew, I know that the structure of this market is super weak, but the market is going to the upside. Okay, that was clear. Value was overlapping to higher. So this high, non-excess high, was the last thing I want to be here was short yesterday. And when this happened here, and we have this period breaking out above this high, still I was reluctant to do anything here, because the next obvious reference was half back, not half back, the breakout level here. But there was nothing there. There was there was this high up here. I mean, no excess in the high. All right, and somewhere in here, somewhere here. Okay, this is short. This is a short covering rally. I was late to assess that. I have my doubts here, but the thing is, when you are sure about something, usually the opportunity is gone. Remember that this is something that I learned from also from Jim, and this could be used for everything in life as well. Uh, We got maybe 60% chances. Somewhere between 55 or 60 or 65, 65%. That's when the opportunity, there's something there. This is an opportunity. When I am 95% sure there's something, okay, there's something going on here. Uh, when I absolutely sure about something, the opportunity is gone. The opportunity is gone. Okay, this is short covering. Somewhere when the market was somewhere around this area, okay, this is short covering. I decided to go long here, but understanding as well. Having as a destination trade, having as a destination trade the 4070, which was this one, it was this one. Okay, but understanding that I could be okay. There was momentum to the outside. This part, remember, the innovators, early adapters. This section was down here, really down here. Early majority, late majority, maybe in this area, early majority, and late majority here. I could be that. I understand that I could be maybe in this area, somewhere between late majority and laggards. You know, looking for the end of the movement was kind of close, and the trade for me was this high here, and my calls didn't work that much because I was late in the movement, but understanding that this could be the end of the movement, I just closed my position when they went above 70. Right? But it was super risky. It was a super risky because the stage at where the market, I thought the market was at that moment in time. Um, what I'm trying to say is the opportunities are here, and we never know when the opportunities are going to rise. Now, today we have a combination of three things, right? We have first, let's check this out. First, we have a breakout to the upside. Um, we have a breakout, not this. Well, this was, well, we have a spike, right? A spike to the upside here. You have a spike to the upside. A spike is just a movement that happens too late in the session for the market to, you know, to verify that this movement, in this case to the upside, as being accepted or rejected. Just just that. We have a spike to the upside. Also, we have a breakout. We have a breakout of the range. A couple of days ago, the market had a breakout of the range, of the 10-day range, and now it's having another breakout to the upside. And third, we have a gap. And we have a gap here. Now this is a breakout, spike, and an upside gap. So three things here are combined here. This I think to me this is like a huge gap, right? And from 77, um, because the volatility is low, there's a huge gap here. This is a one, at least one tick charts. Yeah, are one tick charts. The VIX is below 17. This is the lowest that has been in more than a year. It is ironic because I consider the risk of this market to be extremely high, very high risk in this market. There was again some unusual activity after the close. Look at this big volume after the close. Let me show that in the browser. These are the things that you can see in Windows Trader. I don't think you can see this. You could see this one in another. Let me know if you can see in another profile, another software. Look at the amount of volume. This is 4 to 430. This is 430 to 5. Look, you said this period has nothing. Right? This is one of the lowest volume from the session, but look at the amount of trade that's happening here. This is the first time in this week. Last week we had two of these. This um the thing to me is we have this one on the upper side, this one in the lower side. This is the insight that I may give more validity to this one, more weight to this one than to this over here. But this is just a sign of something's going on there. Um, when the market when the market close at the very look at the way the market close. Look, it was very high, very high. Settle the same as last. Uh, we have a big movement to the upside. Market was super long here, super long here. Huh? It caught the shorts here. There's a short squeeze, but remember, not all these shorts are get out of the market, not yet. There are many can still be praying that the market is going to come back because it was coming back, right? Every time it rally come back, every time rally come back. Okay, this time it's going to come back. Okay, again. Oh yeah, sure, absolutely, right? Praying. I don't think praying is not a good strategy. Um, and the market has a gigantic gap to the outside. Notice how the buying comes from, it started to come half back, settle here, half back, previous, breakout level here. Look at 1, 2, 3 lows from the same level. This is a very mechanical, very mechanical, very mechanical. Not too much volume, very mechanical rally here. The overnight traders are are the weakest of all. Uh, Now the 4200 is just right there. We have one, two, three distributions the market has formed. Okay, this would be the closing of the distribution. I'm going to go ahead and mark this one over here. Distributions close. Okay, one there, and I will just. I think this could be of relevance today as well. I'm going to leave that one as that. I'm going to save this one because I don't want to miss it. And let's take a look now to um, bigger time frames charts. Before going over that, something else that I saw. Yesterday the rally. You have a big rally in the afternoon, right? At the closing. Look at the volume, man. The volume is just nothing happened yesterday. There's nothing here, right? There's nothing backing up the volume. All right. Um, this is something that oh boy that I can. This is it's something very bad. I mean the weakness. This is just add weakness to the market. Notice how this. Notice how this lows. Can you see these lows here? Uh, the bond market, the 10 and the 30, are just right there. If this level if this level doesn't hold, the potential to the downside is huge, man. It's huge. It's just huge to the downside. The 10 has a 3 days that were sold for the same level. This could, this kind of highs limit the damage that the market can do to the in the other side. But the 30 doesn't have that. But I was thinking yesterday that maybe this market can hold this market somehow. And look at this, man. Look at this. What is this? Huh? It looks like short covering to me. Bonds are using, well, I mean, gold is using the 2000 as a support now. It looks like it's going to stay above that level now. But who knows? Nobody knows that. Nobody knows. All right. Now let's look again. After all these crazy movements that were happening, the market is just around that level. Right? It opened this month, opened here, gave this high, the previous monthly bar, uh, and the lack of it fixed the lack of excess here. We have excess in the upper side now. It's very close to have a breakout mm, from February. Look at the potential, channel here. I don't trade channels, but I cannot avoid see this. Try to see this one. No? We were telling maybe this could be the next high here, but coming here puts the market too close to this high as well. Um, this level here is a 42.08, 42.08, very high up here. I got the market there. The market was sold multiple times from 41.40 from that level, which is this high. I decided to go ahead and grab this one, this high, as my reference in the monthly. Multiple times the market sold, come back, 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 sold, come back from this level. This could be the first time the market is being bought from this level. Could be. I'm not saying that is going to happen, but there is something, there could be something there. And you can see the trend here. Kind of like a small trend is forming here, right? We're going to say we have this one and the trend here 1, 2, 3, 4, 5 months going to the upside inside the 12-month range. You know, we are still trading a range. The market has gone nowhere. I won't say that this market has changed already, but because we are still inside a range. This is a trend to the upside, but inside a range. Let's look at the weekly. Let's take a look at the weekly now. The weekly is having an upside trend, one time frame higher for 6 weeks already. 1, 2, 3, 4, 5, 6 weeks going to the downside. If this week doesn't take this low, we will have a 6 week in row going to the upside. It is kind of like getting old. You can see that this bar here has taken almost all the previous bar range. There's some weakness in the lower side. The weak level here, it is just above, we could say that maybe 40.95, 40.82. Could be the market was buying when bought from this level, right? From support, this level is resistance. Now, because it was a breakout, the next breakout is this level, the 42.08, which happens to be the monthly with February high as well. The higher, this is the only gap that's visible in the weekly. The high of this gap is 42.20, 75, something like that. 42.20, 40, let's call it from 40.10 to 40.20. Um, this low also is kind of not really. Uh, you can understand something from this moment to the outside market took this high, break out of this range, and was rejected. No, that's rejection. The the rejection here, the breakout failure targets the opposite side of the range. The opposite side has been taken. The opposite side, this range has been taken. The trade has been completed. Upside continuation, we see the market taking this high out. Breakout failure targets the opposite side of the range, which in this case will be this, the 49.6. Okay. It can put the market too close to this breakout and endanger this range. If the market re-enters this range, the ultimate destination trade is this low down here. All right, but I got this level from that, this high from this is yesterday's, and the next reference in the upper side, 4208.5, with the 4200 in between. The 40, what is it, what is in what the 4200 has? Nothing. It has nothing. It is just a round number here. There's nothing there. But traders see these levels and use this level as a reference. Okay, but there's nothing here around the 4200. But it's not uncommon to see a lot of activity around this level. If there is some solid buying, some strong buying here, the market will just cut through 4200 without hesitation. Maybe we'll cut and come back to check and keep rallying. But if there's a lot of trade here, that is just a good sign of short-term traders. Now, the daily. Got the daily here. Let's take a look at the daily. I can see some danger here. You know, I have seen this. We were talking about this pretty much every day. There's a lot of people that is excited, that is convinced that the low is in. Another people are saying that there is recession. We're going to be in recession. It's time to sell the market. And what I see here is this rally that started here. It has a weak base here. This is the 200. The next low is the 100. The next low 50. The next one previous period high, previous day high, previous day high, breakout. And notice this is very interesting here. This is the danger that I see in this market. You know, the potential firecracker effect in this day. Look, what do we have here? What do we have here? What do we have here? What do we have? What do you think we have here below this one? What do we have here, here, and here? Stops, right? There's a lot. There's a bunch of stops here. There's a bunch of stops here, 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 all across. If something happens here to the downside, it's going to be very. It could be very. It can happen very fast here. The VIX is the volatility index is, as I say, is very low. I don't think that this is the risk. I consider the risk here be very high. All these lows are weak all the way down to this, at least to this level here. At least to this level here. Even this one I would consider a weak low because it is 3900. If this market fails, if this breakout fails, the breakout is happening now, the potential to the downside is high. Okay, all the way down to here. I'm not saying that's going to happen. Okay, what I'm doing here is trying to acknowledge the risk that I will be taking if I go long. Right? The market is trending to the upside. It has been trending for one, two, 3, 4 days. Now we have seen the weekly trading for 5 weeks. 6 weeks has been trading to the upside. So the market is going to the upside. You know, the trend is to the upside. The immediate trend is to the upside. There's an enormous amount of weakness, unbelievable weakness in the lower side. But it doesn't mean that I'm going to go short just because I see that. Sometimes, I mean, many times that happened that when I see that, okay, this market is weak, I'm going to sell this market. I say, and continues used to get short here, and the market just roll over me. A little highway, you don't step in front of the train. Uh, you don't fight the train. If you do some downside trade here, or you fight the trend, your trade has to work really fast, right? Now, we have talked about this, the danger here, the next references, the immediate breakout will be this. Notice how the trend, how this market is taking pretty much almost all of the previous day range, all the previous days range here. Now, it's having some upside extension. We have this upside. This was the previous high of the range. Now the range has extended to the upside. It's bigger now. It could be targeting this gap. No, the other thing is that this gap comes from too far back in time. This is from August last year. It is too far back to be of relevance now for me. You know, it was sold from 200 here. Um, but it's too far back in time to be. I am not that kind. I'm not that kind of trader. My time frame is smaller than that. Let's take a look again. What's happening with bonds? They're very close to this level, man. Very close. Make me think about what are the things that can happen here. You know, Notice how this is the market. This market made a low, made a high here. The breakout happened. When the breakout happened here, you have market has a huge gap and has been bought from this level multiple times. Right now, this market is right there. The 10-year could be this one. Okay, let me just check this one. All right, it's very close to this low here. We're very close to this. So the danger here is that if this market, this if the bond market start to drop here, it could just carry. It could drag the yields lower as well. Oh my God, look at this. Do you see this? Do you see this? This is the dollar. God, look at that trend. You could move this line to the up here. It's selling from this line. The danger also the dollar going higher here. No, stop, 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 stop. This is channel here. All right. I think what I want to see is this here. We're now we're now overnight range, very close to this the mark I have just put there. Now the market take this low. I'll be watching this today. Dollar, what's happening with? Oh boy, oh gold is breaking. All these markets are breaking. They see gold is being bought from the 2000. Okay, few minutes now from the opening. Now following, like I said, I didn't have too much time now. I know, I got 5 minutes. I got 5 minutes. My bad. That big is. Oh, Goldman Sachs. Goldman Sachs has reported lower earnings than expected. No, but this now what we could be entering. I don't think we are in that time where bad news is good news for the market. I don't think so. Oh, something from yesterday that I want to show. What the goal of this business here is, Look at how this, and this happens all the time. Look at how the selling happened here, right? So pretty much same level here, very close to this high. This load, this was kind of good. We got inside bar here, breakout to the downside from the inside bar. This low was from overnight low. This high, this high from overnight low. This high from this high. This high from this high as well. Very mechanical. So these are short-term traders, small traders here. And notice the difference of the movement here versus this one over here. Yeah. Boom. This market let it settle. Boom. Let it settle. Some weakness maybe here. Stand up here. Rally. Let it settle. Rally. Notice the difference of how this trading is conducted versus this one here. There's a lot of momentum trading here as well. All these shorts are being trapped. The shorts here are being trapped, are being squeezed to the outside. Now, what do you do to cover the short? If you are short, what do you do to cover short? When you start seeing your losses increasing by the minute, and keep, I am losing 50, now 100, 150, 500, 1,000. What do you do to cover? You buy, right? That buying could be what fueled this rally here, and what could be fueling a rally here. Now we have a big gap. The market is opening above the spike. Where the spike started here from here. We have a breakout level here. Right? We have a breakout level up here. Um, the 4200 could be used as a reference in the upper side. If the market is going to, I mean, all the signs point to a strong market here, or at least in the short term, a strong market. We have everything favors or increases the odds of upside continuation here. If there's going to be a selling here, it usually happens very early during the session, right? Kind of like right at the opening, market opens here, and boom, I start sales. If it doesn't sell right away, that's a sign of a strong market. In overnight inventory, I would say it's very long. It's extremely long. Look at where all these lows are coming from. Market. Who buys here, for example? Who buys from this level? Once, two, three times. You know, from half back here. All right, there's some selling. The first reference in the lower side is going to be the first sign of weakness. We see market re-entering the range. Second, market closing this overnight distributions, close this distribution, take half back, close the distributions here, and trade inside this range. That will be more signs of weakness. All right. Okay. This could be a continuation to the overnight long inventory. The market is extremely long. Remember that, extremely long. There could be some rebalancing of overnight inventory here. Market re-entered the previous range right up from the opening. I don't like this. This is a sign of weakness here. The gap remains. Let's see if the market can close these overnight distributions here. The first thing I didn't want to happen happened. Market re-entered the previous re-entered the range. Now this is the 12-day range. I'm not talking about this range. I'm talking about the 12-day range. Notice how the market has not closed the overnight distributions yet. This could be some rebalancing. Remember these lows here. Remember the lows that were matching here. We have matching lows here, like 3 or 4. 1, 2, 3, 4. These longs are out now. These longs are out. Many times traders misunderstand this kind of movement. Like you know, this could be just rebalancing of the extremely long overnight inventory that happened here. And then you can misunderstand this for a more potent selling. This is all business here. Longs is all business. Could be market, could be dealing with all business, just all business. The same thing happened yesterday in the opposite direction though. Notice how the market is using this breakout level as a reference to buy here. It's trying to go higher. It can go higher. How many times has been bought from this level? Twice, right? You want to rally? He can. There's a lot of selling happening here. The thing is that it hasn't closed these distributions here. This is some method making a stand again here again. Now the market might has made a new high in the overnight. Now this is Globex high. Remember, highs made in the Globex and the overnight are not as. Now this market is trading as re-entered the range here. Re-entered the range. Targets this low here. It's really far. It seems that it's really far. Could be really far, but remember there's tremendous amount of weakness here in this market. Now, a strong market will close these distributions right away. I mean, a weak market will close these distributions here. A strong market will not come back inside previous range. It's not. It's been bought from this level here now. There is a lot when the market has these kind of gaps. There's a lot of traders here that have been cut short. There's a lot of rebalancing here, margin calls, a lot of things happening all at the same time. And a lot of things can, a lot of activity can happen here at the opening. Um, I think it's better to let the market settle here. I have a bias to the upside. I have a long bias here because of the spike. The market has opened above the spike, above the spike. The market has a gap to the upside. The market has a breakout to the upside. You have three things going on here. It is night, almost half. We are almost half into the first period. The volume is very low. It's very low volume, not even close to half. I think the market is have seen the bonds, what the bond market is doing. The user is there in the bonds. Um, Questions, comments. You know, the market couldn't close this. You know, I was watching this market. It couldn't even close these distributions. This could be a sign of a strong market. This is another sign where we have one opening in the upper side of the spike, above the spike. We have a gap. We have a breakout. Now the market cannot close the distributions here. Cannot close. Now the market can come to the 4200 here. Let's see if the market takes this high out. this overnight how today. It's very extended. This market, there is the inventory here is very long from yesterday and from the overnight. Very long inventory. The reports, I guess the only report that we have today that was of relevance was Goldman Sachs, wasn't it? Let's take. Oh, Netflix after the close. Oh boy. Bank of America before the. I didn't check Bank of America. What happened to Bank of America? Goldman Sachs, some regional banks, and Netflix are closing tomorrow. Tesla is closing as well. Now we got a rally today before Netflix. Now tomorrow Tesla. Of course we're going to rally again. Now the traders do what works. I think it doesn't work anymore. That's why. Just because that's what they do. Wow, this narrow is very. This range is very narrow here. Keeping the back is positive. Keeping the gap is positive. Not closing the upper distributions from the overnight is also positive. Oh, another thing that I noticed yesterday is this value. Value is building high, was being built below the breakout level, not above, but below. There's a lot of value being built here in these 3 days. Yesterday, Friday, and Thursday. I would consider Thursday, but Friday. What day is today? Today is Wednesday, Tuesday, right? Um, Monday and Friday values below the breakout level. That's not good for a. It's not good for an upside movement. Very narrow here. There's a nice taper here. Volume is just not coming here. Notice how we have two up here. Very narrow histogram here. Volume is not coming. The next reference on the upper side is overnight high, which is very close to the 4200. There could be some selling here that appears that can come around this level here. Question, comments. Please let me know if you have any questions or comments. I will be more than glad to answer, or just to talk. There's taper on the lower side. There's lack of volume on the upper side. Ooh, how many times have been bought from this level? Like three times already? 3, 4 times from this height? Very mechanical level. Very mechanical level to buy from this high here. Uh-oh. Oh. 4189, 4190. Three times has been bought from that level. 1, 2, 3. If I've used 5 minute chart, actually I guess it's 4. I remember market coming more than 3 times to that level. You can see the market making a stand here. It's using this as a support. This level is coming, the market being bought from this level. Very narrow range. We are with 87 to 94. Let's like the lower the bigs, the lower the shorter the ranges are going to be. The thing is, if market takes this level out, well, there's nothing here below. We'll close the distributions, targets this low, which is pretty close to overnight hardback buying from here. I don't think this is a good reference to be a buyer here. It could come to close this distribution here, and if the market comes inside this distribution, this one becomes the next destination. Right? The market has re-entered the range, that 11-day range. market has re-entered. Let's make it higher. Yeah. The market has re-entered this range, 3, 6, 9, 12-day range, including today, and can target this, targeting this one. Ah, my bad. Re-entering the range targets this low here, this area here, right? Now the second time the market is coming inside this line. Look at that. Has re-entered this distribution here. Re-enter this distribution targets this low here. But notice how volume drives here. Next destination on the lower side for downside continuation, overnight halfback. There's a lot of trade around the 414 high, around Friday's high. A lot. Now notice how this level now is being used to sell. It was being used to buy and now it's being used to sell. It did not have downside continuation here. Oh, another thing, and this is another thing, another from we had an upside gap to the upside, uh, spike to the upside. You have a gap, breakout range. The other thing, this is an inside day. I forgot to mention that this is an inside day. We have what the market is doing is breaking out of this inside day. The break is happening to the upside. When the breakout happens, go with the break. If the breakout fails, fade the break. Hmm? This is the breakout is there. This is another positive sign to for the upside. But still, trades will be selling. It is true that the market is extremely long. It's very long. From late short covering rally from yesterday and from the overnight session. Next reference, this one. Let's see if the market makes a stand here about this distribution here. Oh boy, has re-entered. Let's see this one. Market is going to open at the low of this range here. Next reference in the lower side, closing the gap. Selling coming from overnight hard work now. Oh boy, you don't want that low. That's a weak low there. That is a very weak low there. I guess I would check this level here. There's a huge amount of volume happening here in the overnight. Everything is positive. Everything was positive to the upside here. Everything. The first sign the first negative sign that comes, the market re-ent, the selling happened right away from the opening. Selling coming right from the opening and re-entering the 12-day range. Now we have a low here that is not good for a bounce because this market is too long. Market is too long. Also, this market is going to take this lowest high. The next downside reference. All the distribution from the overnight have been closed. Mm. The next reference for me would be maybe some buying could happen here. I want to see downside continuation here towards maybe this high here. This is a very visible reference in the lower side. Man, this was a big gap. This was a big gap to be closed for the market to close this gap. So the gap is almost closed. Ooh. One thing too close. Oh boy, look at it. Oh my God, look at that. Oh, God, okay, that spike. I'm out here. That's a yeah. Um, God damn. I just closed. I just closed here. I have the 4170 puts. I puts here. 4170, which is the base of the spike. Um, the spike that we have here to the downside. This is the market was hard here, and then boom, just got to the other side. That was it. Now the signs are negative for the market now. Okay, that these ones are well my reference. This is not good anymore. We have another high. All right, it's overnight high. Uh, overnight high. Okay, overnight high here. Overnight high. Why I closed? Why I closed? Yeah, because my trade was a trade against the trend. Okay, the trend's to the upside. No, we have seen in the morning that it trends to the upside. We have a big gap though. There is a tremendous amount of weakness now in the market because the gap has been closed early, very early in the day has been closed. But I was aiming just at this this area here actually. You know, I guess there's more signs now for the market. Market generated information is telling me that this market is weak. You know, gap was it has everything. It had everything to go to the upside. It had an upside gap. It had a breakout range. It had a breakout of the inside bar. It had um, there were three things. What is the last? A spike, gap, and breakout, and the breakout of the inside bar, the daily inside bar. Now we have this inside bar to the to everything was pointing to the upside. Or everything. And my if I do a trade here against everything, my trade has to work really fast. Really fast. It worked fast. This is fast. This is very fast to the downside. But what is the destination of my trade? I had that before entering the trade. The market can keep breaking all the way down to here to the opposite, but it breaks, so what? That was not my plan. The market gave me what I wanted, and I'm out. Right? Because when you don't close, or when you are actually what happened actually is I had short the market twice today. It was kind of like too early, I believe, to short, but I did short first with 41.80s. The market when the market re-entered this range, but it just started it come back outside. Uh-oh, when the market take this one out, or they say, oh, there could be problems here, just close it. And the market re-entered this range. They say was buying multiple times from this low, 3 or 4 times. Okay, this is not a good market. This is not a good sign for this market, right? And instead of taking the 41.80s here, which what I did first, and then I decided to go for the base of the spike here, uh, for this low here. But provided that the market was going to come to POC down here. And when the spike, if you remember the sports, the big sports, the market came down to here, and then just boom, make such a violent move to the downside. That was my out. That was it. As I say, it can come lower. It can keep going lower, but I think this could be a counteraction to the overnight super long inventory, you know, coming from a day that is squeezed shorts to the upside. Just that. Right? There could be something to the downside, but I'm not going. I won't take more risk than that. Now, when the market re-enters previous day range, the market has failed. The breakout to the upside has failed. There's a failure here, right? We got what we have is this. We have this range. Let's make this a little bit bigger. Notice the monthly, where the monthly is. Notice where the monthly is. You know, this very close actually to this high here. You know, the weekly shows that there is an upside trend. The movement is to the upside. Now, the potential for a breakout, we have a breakout of this whole range, which is what I was doing. Right? This is my time frame that I choose today. It's a breakout and fail. Fields has re-entered the 12-day range. Now it's re-entering the previous day range. The breakout, clearly there's a breakout failure here. Another thing from yesterday, no, I remember this also, I got this on my homework, is that POC did not move yesterday. We got inside value, inside value, and the POC did not move. It did not move, it just stayed lower there, as you can see here. It did not migrate higher. All right, all right, all right. Now, the volume here. Okay, what's the difference? Look at the volume here. We have high volume here, right? I still have it. I didn't see this before. I was going to point this volume, but having just zeros here, which is would be completely different, right? Different than yesterday. My bad. Okay, if this market starts trading sideways here, this will be just long liquidation. Now you got the steam here. If it trades sideways, it will be just liquidation. The market was just getting too long. But let's see. Let's see. This kind the thing is when we trade, if we don't do our homework, we don't have an idea, okay, of the potential scenarios or the potential things that can happen, and we will be tied to price. You know, the market moving higher, market lower, we will be just chasing price, following price. When we do our homework, it helps us to have a better appreciation of what's going on. It help us to find potential trades as well. Now, in the morning, for example, we were talking about the scenarios. You know that what could happen, what will happen on the upper side We got favorable high as the next reference in the upper side. We have a huge gap opening above spike, breakout, breaking out of inside, but everything pointed to the upside. Everything was pointing to the upside. But what if? Okay, what if that happened? If what we expecting to happen doesn't happen? What could be the next thing? Right? Not that we are trying to guess the future, we are trying to get and prepare the scenarios and get in sync with the market. That's what we're trying to do. That trade could be very well over now. Right? Could be over now. It is 10:15. If I think, unless you have any questions or comments, I guess I'm going to call it. I'm going to call the morning stream for today, and wish you guys luck and a good rest of the morning. Okay, guys, stay safe out there. Have a wonderful rest of the morning. If, I'll see you later. Bye bye. Hey, 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 Luis Fernando, ¿cómo estás? No, no hay problema, viejo. Con gusto. Más bien, hay días que son, pero bien, bien solitarios, bien aburridos aquí. Ah, tenga un buen día. ¿Mm? Stay safe. Bye bye.